Welcome guys to Ahead of the Curve 1776. It's me, Mr. Curve. You guys are having a great week, trading week. Sorry I missed you guys on Wednesday. Had a lot of things to wrap up. Had a lot of things that I was involved with, also with my own trading as well, in different businesses that I got going on. If you're new to the channel, guys, we talk about everything from economic data, monetary policy, politics, market, and trading strategies. This is the homepage here. Please like, comment, and share each and every one of my videos, guys. It definitely helps us in the algorithmic system here on YouTube. Also, hand out over to Patreon. I will be updating certain things this week for my $5 and I believe $20 subscription there. That's what also helps fund the page here. And also get yourselves involved via my links, whether that's Robinhood, you know, for options trading, stock trading, also Webull, same thing, FS Choice for contract for differences, spot transactions, as well as eToro for cryptos as well too. Also, guys, watch the featured channels down here. I watch them as well to keep myself up to date on what's going on. Also, check out my playlist, guys, and I appreciate you guys. So let's get to the money and let's get to the markets. So this was the last economic week here, guys. We did have a lot going on. We had Bank of England, Governor Bailey spoke several times throughout the week. He actually spoke on Monday and a little bit earlier on Tuesday. Not a lot going on, just reiterated a lot of the same thing with the rhetoric. They're basically both going to be tightening. They're on a unanimous cycle of tightening between the Fed as well as the Bank of England. As well as the Bank of Canada. Also, you guys come down here as well. Richmond Manufacturing Index came out, I guess, better than expected, but was negative. We also had consumer confidence, for some strange reason, shot up to 104.2, which is pretty remarkable given everything that's going on, especially in this last quarter here. We also had Australia's CPI year over year, 6.8, definitely cooling off somewhat, but still well above everybody's 2%, 2 or 3% target here. Then on Wednesday, we had the pending home sales, kind of inflated there. Actually, you know, pretty shocking. We were expecting a negative reading, but still resilient there. Again, guys, these are pending home sale, which means that it has yet to be closed. It has been a signed contract, but has not closed yet. Typically, closings are anywhere earlier, 15 to 20 days, as far out as maybe 60 days, depending on whether it's a cash sale or whether it is a loan sale. So we'll scroll down here, guys. We have the German preliminary CPI month over month, still higher than expected for Germany. Germany does lead the way for the Eurozone economic situation over there. So between all the Eurozone, Germany is the horse on the chariot. We'll scroll down here. Final GDP numbers quarter over quarter, slightly lower than expected. Again, guys, this is a pretty high alert reading, which is basically showing that gross domestic product was just a little bit higher, basically higher. And again, this is nominal, so who knows with inflation, counteracting that. I officially count us being in a recession now. If we had 2% inflation, that was at least even by the governmental numbers, then maybe this would be pure growth, but I would consider that a contraction. We're going to scroll down here. Unemployment claims 198K, definitely elevated compared to where we were at before, guys. We were hovering around the 190 mark, and then we did have a reading a couple weeks ago a little bit higher, but we are pushing higher. I do believe that we will get bigger numbers as the months go on, especially for the next month, just due to the banking debacle. So I definitely believe that people will be putting capital to the side. And again, guys, this video is about preservation of capital. That's what I want the theme of this video to be about: capital preservation. And we're going to be talking about SLV trust as well as the GLD trust, because right now I'm seeing a very pivotal move, and we're hitting certain support levels that I believe might be a catalyst for us to push forward in the gold and silver markets there. So we'll definitely take a look at that further in the video here. We also had definitely a lot of people spoke. We had Treasury Secretary Yellen spoke as well. We had Tokyo's core CPI year over year, still higher reading. They want that 2% target. And then we had Chinese manufacturing, non-manufacturing PMIs, both above 50, which means expansionary. We'll scroll down here. And then we had basically the Eurozone happening there. Let's go back here, click the button, sorry about that. And then we'll scroll down here. And then we had Canada's GDP month over month, definitely on the higher end there, guys. We're looking at a spot 5 on the month-over-month reading. And then the core PCE price index, a lot of people love this measurement here. It definitely cooled off somewhat, guys, but this is very small compared to the huge amount of rate increases. If you guys look over to the left here, we're at 5.0 on the lower bound, 4.75 for New Zealand, 4.5 for Canada, 4.25 for the Brits over there, Australia 3.6, Euro 3.5, and then obviously we got the negative reading, and we have the Swiss at 1.5. So the way this typically goes is we typically see the dollar get extremely strong during this period, but we start to see the export-driven economy start to pull back way before the higher G7 economies pull back, or the consumer-driven economies, right? One is export, the other one is consumer. So obviously we're starting to see that we're at the end of the rope for the restrictive policy stance for the consumer-driven economies. You can only tighten so much before something either breaks or you have to reverse course. And that's pretty much where we're at here, and that is expressed obviously through the revised University of Michigan consumer sentiment at 62 on the dot there. But if you scroll up here, we're kind of having conflicted readings when we have the consumer confidence report being a reading of what it is. So we're definitely going back and forth there. It is a difference between the two. Consumer confidence compared to the University of Michigan consumer sentiment, we're having conflicting reports here. But again, this survey is a lot bigger. It's about 500 consumers, so this is a more accurate reading of what it should be. Preliminary is obviously a little bit higher indicator, but medium holds its weight just as well. Because it is pivotal, and it definitely gives a broader scope of what's actually happened. Also, we have ECB President Lagarde also spoke as well. She spoke a little bit, and then we had a couple of FOMC members speaking. A lot of the same echo chamber for what was being spoken about, so I will not harp on that. We will go now to the next week here, and we will see what's happening here. Now, I will tell you, let me just kind of get this out there, guys. This is going to be a low liquidity week. This is the week of Easter. Typically, the Friday before, I'm giving you guys a lot of gems here. The Friday before and up till that Good Friday, liquidity just dries up. You're going to see a lot of sideways trading. You're going to see a lot of narrow range trading going on. You're going to see a lot of volatility. Maybe your position is going to go the opposite way immediately. I tend to, because I deal with a lot of different programs and I deal with a lot of different entities, I like to turn all my programs off, and I like to turn my strategies off just for this week, just because you never know what might actually occur. Maybe something will happen, and then the position will go against you, and then by the time you realize what's going on, it's so far in the negative, and then maybe you'll try to get back in, and then you'll have the same thing happen. Typically, 2 trades, if you lose 2 consecutive trades, you should kind of sit it out. You should cut your risk in half, and then whatever you cut your risk in half, actually only trade that as well too. And then if you lose that 3rd trade, you sit out for a week. That is my strategy. That's what I've always done, because there could be other things that's going on in the markets, guys, that you're not aware of. I do try to stay up to date on all the news that is happening minute by minute, hour by hour, but it is hard, and sometimes it could just be the liquidity drying up, which gives you, either high volatility or low volatility, which means that you're not able to profit. So we're going to go and look at China here. They are having their observation of tomb sweeping day. That is for, I believe, 3 or 4 days here for them. And then they get back to it on Wednesday through Friday. But then we obviously have the, the euro, as well as the US, as well as the UK actually observing Good Friday. So the Eurozone, the UK, as well as us are going to be observing. So definitely by Thursday or Friday, liquidity will definitely drop. We might have somewhat good trading days between Sunday and Wednesday, but I definitely just sit this week out, just due to we risk a lot of capital in these markets, guys, and we have big positions, so we just don't want to be able to be vulnerable in the event that the position goes against us, just due to the low volatility. Because the banks do most of the trading. The banks and institutional investors actually do most of the trading, and they own algorithms and programs as well. So if they have those sitting out, and then you have yours in there, chances you could be swept out as well too. So just be careful of that, guys. Capital preservation is important, as well as looking forward to other commodity trades and getting those in line as well too. So we'll scroll down here, guys. A lot going on for the week here. Let's kind of lay it out from economic data. We have a little bit of Australia news coming out. We also got some China some Chinese manufacturing PMI that's going to be dropping. Even though these are low indicators, they're still kind of important because it'll give us a gauge as to what's really going on. Monday, we have the ISM manufacturing PMI. That's typically the first Monday of the new month. We're looking at a contraction there, guys, below that 50 mark. We're also looking at manufacturing prices. So this is where we kind of see a mini stagflation. We're seeing the actual production part of it being below 50, but we're seeing the prices being above, which is definitely a stagnant a situation to be in. Typically, you want the inverse for a healthy reading. We'll scroll down here. We have the worst total vehicle sales, 14.7 million. We'll see if that's going to come out better than expected. I will say this is a low bar to reach over, but I definitely don't think we're probably going to be able to do it. We have beat the other readings, but I think they've been kind of keeping the bar so low that they could at least, for side reasons, keep those numbers looking somewhat good. We also have the Bank of Canada Business Outlook Survey. And then we have later throughout the night, starting the Asian session for Tuesday, we have the Australian Bank releasing their decision, going up basically 0.25%, which is basically a non-increase. Remember, I told you guys anything 0.25 has to be at least greater than the 0.5, just due to the inflationary factor of only a 0.25 basis point isn't going to do anything as far as an actual rate increase. It's a very dovish. It is more for a headline number than it actually is going to do anything. We'll scroll down here, guys. We'll see what that looks like as well too as the week develop. Jolt's job opening 10.49 million. That's definitely well off the highs of what we used to be here, guys. We scroll down here, I think we got as high as like 11 million for sure, guys, a couple years ago, 11 and a half, and then we're definitely pulling back there. Optimism here, we're seeing a contraction. So, and then we'll scroll down here, guys. We still got that Chinese bank observance of the tomb sweeping, and then we also have another quarter point for New Zealand bank. Again, guys, Governor Lowe will speak as well. This is going to be a non-event, just unless they're somehow going to pivot. But it is essentially the express interest rate hike of 0.25 is an essential pivot. We'll scroll down here, guys. We got the ADP. A lot of PMI from the Eurozone, but then we got the ADP here coming out 208K. I definitely expect them to beat that possibly just due to the low hanging bar. Then the service sector, we're almost 70% service-based economy or consumer-driven economy, so this is huge. This reading being above the 50 mark is overall good for the U.S. economy. Will it notch below that? Possibly. We might get a 53 handle, 52 handle. We'll see how that looks. Crude oil inventories on Wednesday. We're going to see how many barrels is going to be traded that week. And then we'll scroll down here. We got the Canadian employment situation. The crazy part is we got this on a Thursday. It's typically released the first Friday of the month. So maybe we'll have a little bit of movement there for Thursday. Thursday is a huge influx of trading volume. It's typically the last real trading day of the week, just due to the fact that most of the Eurozone cut off about 8, 9 o'clock, 10 o'clock during the day, and then we kind of fizzle out for the rest of the day on Friday. So I typically do not trade Fridays for the most part. It's just not a lot of liquidity, and it's a lot of rapid volatility. To scroll down here, we got Friday will release theirs, even though it's essentially a bank holiday for Canada, Eurozone, and the Brits there. But again, guys, we are expecting a better than expected reading for it. We'll probably get the hourly earnings being probably ticked up just a little, since we had a softer number last month. Probably the unemployment rate will tick up because it did tick up 0.2 from last month. We'll probably see more people being added there and less people being taken off at a quicker pace. So then we'll probably get a softer reading on this as well too. But who knows? This is such a low number, 235,000 for the month. We might blow that out of the water. So we'll probably have a little bit of a mixed reading for that. And again, that typically adds volatility as well too. There's a lot of influx of capital, but since it's on that Friday, Good Friday, I'm not so sure, guys. And again, I do sit this week out just for capital preservation. Again, guys, capital preservation is about 90% of all strategies. You need to be able to save your money in order to be able to have better trading in the future. Okay, you can't trade something that you don't have, or you can't trade something because you missed the opportunity because you were in the markets when you weren't supposed to be. So that is a pivotal thing as well too. Again, guys, I will be sitting this week out. As much as it's going to pain me, and maybe I am going to miss some opportunities, but I have to for capital preservation reasons, because I got to make sure that I'm not going to be caught with all these bank holidays here drying up liquidity. Again, guys, 90% of the trading volume is the big institutions as well as the banks. So, and I deal with Forex, which is the exchange market, as well as the metals, as well as crypto. So again, if you guys know how the actual game works, you got to know when the players are there, just when the players are not there. Case in point, in December, if you're trying to trade in December and institutional investors and the banks are pretty much virtually off, then you're going to be in a tight range, which means you're going to lose some money. So that's why, guys, I'm always keeping you ahead of the curve and keeping you ahead of the situation. That's why I created this page, so it gives you a more layman's idea and standpoint, so you can see for yourself. That way you're wondering why your strategy may not work or you're having inconsistencies. I'm going to help you along the way. So let's get you guys where I see the euro/US dollar, the most liquid pair in Forex. Let's see where I seen the last week and where possibly we're going to go for this week. So we were kind of all over the place this week, guys. We started out here. Scroll down here. We started out at about this mark here. We started out, what is this, 1.0775, and then we did definitely lose a little bit of steam here. We kind of lost some pips on the euro. On the US dollar. We shot up there a little bit here. I definitely thought that we were going to take the downward approach on the euro, but we definitely pushed up here. The euro caught a bit there, and then the dollar lost a little bit of steam, which it happens, guys. I didn't expect it to go as wild as it did, but with the banking debacle being kind of swept under the rug, we did have a risk on sentiment, which then gave a lift off to stocks as well as a softer dollar. So that's pretty much what essentially happened there. Then we had the real shoot up here Friday morning there for trading. The the late Asia Euro session and then the US session kind of tapered off. And again, guys, that Friday mark is where I'm showing you is basically where we kind of had that downward slope there of a stronger dollar. But Thursday we definitely had a softer dollar, and then we kind of had that strength. But that strength, guys, I believe was a profit-taking moment from the Thursday. We kind of had people selling off to take profits into the weekend here. So most people don't like to hold on to a position over the weekend. I know I don't. Look at this here. Fed may take comfort with U.S. jobs seen showing moderate wages. Absolutely. I mean, because they want softer inflation numbers, so that way they can kind of back off a little bit and maybe just coast. So yeah, I mean, we're going to expect them to get excited when they see higher unemployment claims, lower job postings, layoffs. I'm sure they're going to get excited about that. Under their breath, they're going to be, of course. Obviously, they want maximum employment and price stability as their mandates, but of course, they have to do what they got to do to kind of gain back some of their prestige there. So we'll actually look at where I think it'll probably go for the week here. We'll probably have a traded range, probably for sure. We have a couple interest rate, obviously, decisions coming out, so that might push the dollar a little bit higher. So maybe we will go up a little bit higher, but with the lack of liquidity for the week, we might stay in a very, tight trading range, maybe the 1.095, and then maybe we'll get as low as a 1.075, maybe a 1.07 on the euro. But we'll probably push up a little bit. Maybe there will be a little bit of risk sentiment on, and then we'll kind of take it from there and see how that's going to look, guys. But all in all, guys, that's pretty much where I see it. Again, guys, I will be sitting this week out, as much as it pains me to do that, because I do have a lot of strategies that I deploy, and I do a lot. So it's gonna between the Chinese having their bank holiday. Typically, we don't always have those two things coincide, but since China is such a huge partner in the forex as well as the trading world, unfortunately, I gotta sit it out, guys. I cannot risk the capital. I risk quite a bit of capital to be in the market, so I definitely don't want to have any of that risk happening there. Again, guys, capital preservation is 80% of trading. So then we'll go ahead, guys, and get you guys over to the metals market. Let's see where I see, let's just say, gold and US dollar going for the week. Now, I'll kind of gloss over a little bit. We did have the Fed raising their balance sheet overall last week from the Thursday to Thursday mark. I think it was about $100 billion or so. I don't know how much farther they're going to go. Obviously, banks are weak. They did get rid of the liquidity capital requirement a few years ago, so they don't technically have to keep any actual cash on hand, which is a risk, obviously, right? Look at this, is Meta heading to $25? Possibly, guys. I mean, we got silver up to the 24 mark and some change, then we got gold at trading, last trading at 1967. Let's take a look at the 1 hour chart for the week here, so I can kind of show you what it looked like. We basically did trade a little bit down to start the week here, and then we just shot up here, trying to get back to that psychological $2,000 level. I don't think we're going to take it out this next week unless something crazy happens, a headline situation, a black swan. Even with the interest rates going up a quarter point for New Zealand and Australia, I don't see that being a huge catalyst, because I do believe their tones will be dovish in their statements. So we could go above that 2,000. We got enough price pressure and the supply and demand there. They just can't suppress it as much. We could see it go above the 2,000 mark, but I just don't see it. I actually thought that we would have shot past 2,000 just this past week, being that it was the last week of the trading month. And typically at the beginning of the month and the end of the month is when commodity trading really takes off. So we might see that push past that, being we're entering in the first part of the month, right? The first week and then the last week. But if it didn't do it for the last week, we would need a huge catalyst to push us above that. What might be that catalyst is on Friday, even though there won't be a lot of people trading, we might actually have a huge push up due to softer employment numbers, which means that the Fed will be more dovish, which means that they'll either pause rates or lower rates. In any event, that will be seen as a risk on appetite there, so we might see people bidding that up. Where I see it going for the week, gold and US dollar here, probably the 2,000 psychological level, but I do think that since the dollar lost some steam last week, we probably will pull back a little bit just due to profit taking that happened, as you guys can see right here. Profit taking that happened in the late morning trading, as well as people being just gone for the week. So I think we're going to be in a very narrow range. I think we're going to be in the 1985 high end, and then we'll probably get down maybe as low as 1900 for a nice soft pullback, maybe before that employment situation. Again, guys, it's hard for me to say just due to all the volatility and everything that's going on nowadays in trading, but I definitely do think we'll probably have a little bit of a lull here for the week. So, and that's okay, guys. Get your strategies in order, take some time, spend with your family, celebrate whatever holiday that you guys choose, given whatever faith that you guys are in, and be ready for that, what I call week 2 of trading of April, because it will be a huge influx. Everybody will be back, people will be ready to get to it, and we'll essentially have the rest of the month to trade, maybe about 20 days, because I think we have 30 days in April. So we'll have maybe about 20 some days to really make our money and make our money for the month. And then May, we're going to be right as rain in May. Not a lot going on. There will not be any Christian holidays for a while here, and then we won't even really have any real holidays until I believe we come up in the later half of May. But other than that, guys, we will be in a softer trading range also for the summer. So May and June and July is really where we hit it. A lot of people do take a vacation in August. Unfortunately, I'll have to probably sit that one out as well. And then obviously we'll come back for September. October is a little soft as well too, so we'll have to make sure that we're again deploying the best strategies possible. And then obviously we'll have the big month for November up until Thanksgiving, and then I typically sit it out for the month of December. I tie everything to liquidity, guys. I want to be there when the big players are there, so I can take a little bit off the table, and then I want to kind of be off to the sidelines when everybody else is just in the tight trading range. Now, again, a lot of people have scalping trading that they do. They take advantage of that. I'm more on a swing trading strategies for a lot of my programs and myself, so it just depends, guys. But yeah, that's pretty much where I see gold there. Silver has a lot more upside. I just think gold is definitely a more stable trading instrument, but silver has a lot of potential. I actually made a decent amount of money on silver trading this week just because it showed more opportunities than gold. I knew gold was going to be a tough pill to swallow, getting above that 2,000 mark, and we would definitely see that pullback of the psychological level. So definitely silver was one of those big plays and I'll show you guys that real quick. So silver definitely had its moment this week. It really shot up. I mean, as you guys can see here, that Thursday it shot up. It pulled back a little bit from some readings there, and then it definitely still shot up there. And then on Friday, it kept its elevated position, even though gold sold off. So I did make a little bit of money because the trend was showing that it was still going to be strong there. And then I sold out about 11 o'clock. That way I got out a little bit earlier. But that's typically what I do. I hold it till maybe about 11, 12. But again, guys, this is all pivotal. This is all tied to monetary policy and the economic situation. A lot of people are forecasting a actual nominal recession soon, even though I felt like we've probably been in one for the last quarter or two. But we're probably going to get that nominal recession pretty soon here, which is going to be pivotal for the markets. Let's get you guys now over to where I see WTI. Let's see if it held its own for the week and for the week ahead. Let's go back a little bit. Silver, I probably see maybe touching the 25 mark for the week because it doesn't have a psychological component tied to it. The highest it got before was like 50. I think it could pull back though to maybe the 23 mark to kind of, trade that range of the consolidated period for the last week. But it could shoot to that 25. It has a lot more legs underneath it than gold does. Gold, it's way more volatile than gold. I typically trade gold just due to a stability factor, but silver has a nice opportunity as well too, and maybe we're going to see that push up there. Let's get you guys now over to WTI and what happened for that. So as you guys know, definitely Google BRICS Nation, BRICS. That's a huge thing right now. It could cause a more inflationary impact on people selling dollars, not using dollars to have its stability. So that might translate to everything else we do, guys. We'll go ahead, and this is a daily chart here, but we'll go out on a 1 hour chart here to kind of recap the week. The week was definitely elevated here. We started out at about the 70 handle, 67, 69 and some change, and then we shot up here about a good almost 10% there just to shoot up. I definitely thought we were going to pull back just due to some worser economic numbers coming out. Maybe another bank, something crazy happened which would have drew liquidity, but all was well. So when things are calm and that VIX is under 20, hey, risk is on, right? So we did push up there a little bit here. Again, guys, we don't know what may happen. Look at this here. Why oil prices have reacted to the financial crisis through history. Or how they did, right? So normally we have a huge pullback. WTI back in 0809 definitely had a huge pullback. I think it cut itself in half. I think we were at the 140, 150 level, and we cut ourselves in half down to like the 50, 60 level. So again, guys, we are inflating here. A lot of people think the inflation factor is coming up. Look at this, OPEC to announce surprise cuts of around 1.16 barrels. So that's going to be huge. That is inflationary, right? Anything of a cut of supply, which means that the demand is still there, prices are elevated, so we could probably see that push up. Where I see maybe this going for the week, we do have crude oil inventories on Wednesday. I think we were expecting even a negative reading on that. We could probably touch the 80 handle. A lot more volatility in trading happens for WTI as an instrument, especially on the spot level and the futures. So I think we could possibly get to that 80 mark. But again, if nobody's there trading it, guys, it will pull back significantly. It'll probably touch back to that 70 handle. Again, guys, I don't think a lot is going to happen this week. You guys already know my stance on that. So I don't think that's going to be a huge thing. I'm going to kind of leave it there for WTI because I don't expect a lot from it. Again, it could push up given the interest rate decisions and lack of volatility. Also could have huge price swings. So watch out for that, guys. Again, the market, the U.S. will still be in the game. UK will be up until about Thursday and Friday. So we still might have a little bit of price action. And then maybe on Wednesday with the crude oil inventories, even though it's a light indicator, could push it up a little bit here, guys. So maybe we will see the 80 handle. Going into that weekend here, that holiday weekend, maybe we'll see a little bit of a push, but don't be surprised if you don't see much activity. Let's get you guys now over to cryptos. That is a 24/7 market, and let's see what happened for its last week. So just like I said, guys, we got the readings up here. They are constantly trading. We did have Bitcoin for the most part kind of placid, just staying the coast there at the 28 mark, just above that. It did pull back a little bit here. Let's go ahead and take a reading at that on the 1 hour chart. I love the 1 hours here. So we'll see that it basically from the 27 came about 27 and some change, high nines there. It got above to the 29 mark, and then it just kind of pulled back there, and we're kind of coasting here. I think we're gonna, remember I told you guys my philosophy: if it's going up, then it's going up. But if it's staying sideways, it's most likely going down, right? And if it's going down, it's really going down. And as you guys can see here, if it's sitting sideways for too long, we're going to expect a pullback, maybe some profit. I did take some profit. I believe it was the beginning of last week. I took some profit after the run up from the 20 mark to the 28 mark. I just felt like that was such a huge, a 30% swing that I had to take some profits there, and it was smart that I did because I'm able to hold on to that in cash. And again, guys, I'm pretty much a trader, guys. A lot of this, a lot of this for me is trading strategies. I use this as a way to earn money, right? As a way to provide. So I don't get wrapped up into all of this, guys. I don't get wrapped up into the entities themselves. I use them as a means to an end. Look at this here. Elon Musk seeks to end 258 billion Dogecoin lawsuit. Good luck with that. Hopefully he's able to make a little bit of, hopefully he's able to save a little bit of money there, because between the Twitter situation, this guy's got money to throw around, just put it like that. So yeah, guys, pretty much for the week where I see, Bitcoin possibly pushing up to the 29 mark again to try to retest that level there that was done a little bit. What is this, 10 p.m. there, 29,173. But I definitely think we're going to pull back, guys. I think we're going to pull back because I don't think there's going to be a lot of value. I told you guys, everything is tied to volumes. If the big players are not there, you will get crazy price action. You will get inadvertent price action. So, and again, I always follow BTC. It is the most held crypto. It's still today, a little bit, I think, 12, 13 years in the game. Let's go over to the dollar index, guys. I got a few things to talk about there. So dollar index, guys, as you guys can see here, we'll go out on the 27th here. That's pretty much when we start. We did have a pullback there significantly. We started out the trading at, let's see here if I can find it, 103.15, and then we did pull back to the 102.59. Now, in relative terms, it's not a lot, because if we go over a month here, we didn't see it from high ends to 105, so we basically stayed the same. Again, that week before the holiday week, we typically start to see things dry up, and then when we got to that Friday, we definitely things seemed definitely had dried up. But for the last day, we did see that profit taking, which gave the dollar a little bit of a bid there. Now, if we go out on a 6-month chart, we can definitely still see the steady decline of the dollar index, and if we go on a year to date, we kind of see the influx between the two. So we're definitely changing course here with that downward slope of the dollar index, but I definitely think we might have a range here. We might get back up to that 103.24. It is very possible. And then the one month here, we're still definitely on the downward slope. So maybe we'll have a little bit of a reprieve here, and then we'll definitely probably continue the downward slope. But again, guys, we could have a black swan event. We could have a risk off situation, and again, if that draws down liquidity or keeps liquidity on the sidelines, then the dollar will get stronger. You just got to be mindful of that, guys. Let's get you guys now over to where I see it going for the week. Probably the 103.5, low end 102, guys, because that's pretty much where we traded the range so far, 103 down to the 102. So we'll probably stay in that, probably even narrow range than what we just had the last week to finish out the month. Let's get you guys now over to the stock market and where I see that going. All things being considered, for the last trading week, the Nasdaq did phenomenal. The VIX did phenomenal, pushing that back to the under the 20 mark, so price action is more predictable. And then the Dow did phenomenal as well. The one thing I will say, out of all the turbulent times that we have had the Dow Jones holding its stable. It has been the most stable entity that I've seen, even compared to gold and silver, guys. It's just definitely held its own. That's again tied to a lot of things, guys. Tied to a lot of people's 401ks, pensions. So they're going to keep that stable at all costs, right? They got to keep that confidence going. And then we also had the S&P had a little bit of a bid, but the Nasdaq definitely really shot up with a lot of those tech stocks shooting up, which was huge. And then the bond action. Let's check out the bond action here. We are kind of getting the curve back here. We're still slightly inverted here. We're still inverted, but we did kind of have a little bit of a price action throughout the earlier of the week. Kind of trying to get back to some normalcy, but they're definitely seeing the rates being lower at some point here in the next what is this here? Basically in the next 3 or 4 months here. So how that's yet to be determined, we'll see, right? What'll be the catalyst for that? We shall see. Maybe a huge influx of unemployment, maybe a couple more banks collapsing, who knows, guys. But yeah, that's pretty much where I see stocks going. It's going to be flat this week, guys. I mean, we might have a little bit of a, you know, risk off or risk on, but it's going to be relatively flat. Again, we're coming up to that Christian holiday. It is pivotal, and liquidity tends to definitely dry up there. So we get those negative trading, we get those trading ranges, which means that it's either if you're going up or going down, you can make money. But if it's staying sideways, you will lose money, regardless of whatever it is. Make sure you be mindful of that price action. Let's get you guys now over to SLV and GLD. I want to kind of end the video there. So I figured, guys, it had such a huge run up here that I might want to, you know, bring you guys up to speed on what's possibly going to happen here. We'll go out. I'm on TradingView here, guys. Definitely give them a look here. I love their platforms. There's so many different tools and things that you guys can use on TradingView. That it definitely holds its weight in gold for sure. Pun intended. So as you guys can see here, we did have a huge run up. We had a pullback there, right? Given about February. Let me go back on the 1 hour chart here. We had that pullback. Jerome Powell was talking it up, right? Talking a good game. Hey, we're still higher for longer. We still got, you know, we're farther out on the dot plot compared to what a lot of people are thinking we're going to be. And then we had that change. Then we had a couple banks collapsing. And now we are having that run up here, guys, as you can see. I definitely think there's more room here for GLD. Again, guys, it's not financial advice. Please do your own due diligence and talk to a licensed professional. But I'm definitely believing that we're probably going to shoot up a little bit here. We're probably going to maybe touch that 200 handle for GLD, which is huge. Last time we did that, let's go out on a 4 hour chart. Let's go even farther than that, I guess. On a 1 day chart, we were about a year ago from now, and then that's when they started the tightening cycle. That's when we seen stocks selling off. So we definitely went in that period of the downward trajectory, but now we are pushing back up. I believe the tightening cycle may be over with. So that's huge. GLD might be the play. And then let's go over here and check it out. Let's go to SLV real quick. I want to show you guys just to end the video. And yeah, I mean, we definitely are pushing up here. Let's go out on that 1 day. Still had the same rhetoric right last year, but we've already exceeded that point. So it is definitely looking like a strong uptrend for silver for sure. Let me go back here. A strong uptrend for silver for sure. So if you look at both here, we got GLD and SLV. SLV is definitely shooting up way past that. Again, nominally it would do that because it is a smaller number compared to the 1800 mark. But again, guys, just overall, you can see the convergence here of people piling more into SLV. So SLV probably was really definitely the play. But again, both of these guys are probably going up with the dollar getting weaker, guys. Everything is priced in dollars, and with the BRICS situation intensify, we might see people selling dollars, right? So I think overall, guys, until we get into a situation where we have a catalyst for risk off and we see people running to dollars, which might not be happening for a while, the dollar might be under pressure. I want to show you guys one more thing here because I'm tired of a lot of other videos that I see and everything like that, you know, trying to, you know, the whole BRICS situation is they're going to start trading directly, ditching the US dollar. But if at any point any of these BRICS nations to try to go on a gold standard, I'm going to show you guys something that would definitely tip the tides there. So I definitely don't show this a lot, guys. I take a mental note of this myself, but if you guys can see here, I always like to show this. This is on the deck clock here. I always like to, if worse came to worse and everybody is, you know, oh my God, we got to go back on the gold standard, right? You got to be able to, you know, evenly exchange your gold for a certain amount of dollars or whatever, right? You can technically do that now, but it's inflating, right? It's not a fixed price, but it's not $20 or $30 back like, you know, 100 years ago when it was a fixed price, right? Or even the revaluation when it was even higher, right? But, or August 1571, right, when we went off the gold standard. All right, let's go back here. Let's look here. Over in this column, gold holdings by country in ounces, 286 million ounces, okay? That is held by the U.S. The next biggest country is Germany, right, in the Eurozone, a part of NATO. 118 million ounces. The IMF, International Monetary Fund, almost 100 million ounces. So just these three alone hold a lot. We scroll down, another G7 member, 86 million, right? France, 85 million. Russia, 81. You know, Russia and China, BRICS situation. You know, they got a decent amount. Switzerland, obviously neutral up until this point. 36 million. Japan, about 30 million. India, 26. Netherlands, and then Euro as a whole for a lot of the smaller countries, 17 million ounces. And then we're just looking at, you know, month to date, 26 million ounces. But who's collecting that, guys? I mean, maybe, you know, we always are hearing the articles of Russia and China and, you know, other countries, but who's really accumulating that? And what's evident here is obviously the U.S. got to be accumulating that. Maybe they've already had, and this is just the numbers that we see, guys. Maybe it's more, maybe it's less. Who knows, right? But again, guys, if we're going back to a situation where it is a gold standard, quite naturally, guys, the U.S. would win this, even from a possible conflict that a lot of people see between China and Russia. If they wanted to go back to that situation of a fixed monetary standard, then again, guys, the U.S. would be well in advance, more capitalized. And what I mean by that is everybody's worried about the fact that you know manufacturing production is not here. I definitely believe that should be here. I feel like we should be making our own products. But even in the event that we have to turn this around, start actually trading in gold and silver, and going back to that type of monetary policy or stance. This is going to be good for everybody. I mean, you're going to have your dollar's going to be a lot stronger. It's going to be fixed. And then, we would have enough to basically start over, essentially, right? And that's just what's being reported here. Could be more. But again, guys, that's going to be pivotal because everybody's just talking like as if the U.S. does not have its own personal savings. They do. They hold a lot. And that's huge, just being the top number there. I mean, they have the highest military presence and might, as well as the most gold. So, quite naturally, guys, they're in a way better position. If these smaller countries wanted to go on their own and de-dollarize, it is very well possible. But again, guys, they're ultimately going to hurt themselves because the U.S. is the more capitalized country. And I hate to say it, guys, whoever has the gold, the golden rule. Whoever has the gold makes the rules, right? That's my gold standard, obviously, right? But again, guys, that's going to be huge. Almost 300 million ounces. And again, if we go back here, we can definitely look and see from the clock here. Let me go back and we can see who's accumulating, right? We'll see the gold supply demand. Now, the gold supply demand, China is obviously leading the way there. They're at the 36 million, gold demand by country in ounces. So they're definitely, pushing forward there. And then the United States is basically about a third of that, right? So, about 20% of that. Why? China definitely is pushing up there. We have, let me scroll down here, Russia really not accumulating a lot as much as a lot of people would think. But China definitely is because they are going to try to be the world reserve currency. But again, guys, it's hard to be the world reserve currency when you don't hold the actual most gold. So as much as everybody loves to see the U.S. fall or lose its place, guys, they've been doing this for hundreds of years. So I definitely don't think that's going to be the case, guys. If you stay to this entirety of the video, please like, comment, share, subscribe. I appreciate each and every one of you subs. Please join the subscriber page there for this. I think you can subscribe to my page for $5. It is monumental that you do that. It does help the channel immensely. It helps me to provide more content on a regular basis to be able to give you guys what you need. And again, guys, look at this gold demand by sectors: jewelry, industry, dentistry, electronics. Again, guys, this is definitely high demand. Total investment, a lot of people hold it as investment as well as in coins here, guys. So, and then the central banks alone, 19 million ounces there are in demand just by the central banks to try to stabilize their own currencies. And what I really truthfully believe it is happening, they're trying to stable their own currencies because they know they're inflating them away. So they have to kind of even the pendulum. They got to make sure that on one side that they're not overinflating compared to what they have, just in case they have to back it by something. So that's why they keep it on hand, hence why the U.S. keeps it on hand. So if we were to evaluate 300 trillion ounces by what it would actually be, guys. We would have way more than enough to pay off our debt, start fresh. So don't mind all of this noise, guys. The U.S. is still number one, will always be number one, because they just had a lot of investment in the game, guys. When you've done it as long as the U.S. have, honestly, without the U.S., China wouldn't even be probably a quarter of what it is. It was with that NAFTA agreement back in the early 90s where they really started to take hold. I mean, and again, they are not in a very good position to be wanting to start a lot of problems due to the fact that they do have a huge population that do need international trade. So I think all of this is noise. I think it's pageantry. I think it's theater. I don't think it's going to go anywhere. And if it does go somewhere where they ratify something amongst themselves, that it'll be short-lived, because at some point somebody's going to want to do business with the U.S. I appreciate each and every one of you guys. Please like, comment, share, subscribe. Hit that bell notification for the latest videos. And as always, in order to be profitable, one must have the knowledge and insight about the next trader position to. You guys already know, you've been here for a little bit. Stay ahead of the curve, guys. I will see you guys on Wednesday. We'll go over some numbers there as well to see how the week is going to end. And then if any other shoe drops, I'll be giving you commentary on that. Please subscribe to the page, guys. Please head over to Patreon. I'll probably post a few things there. And I will see you guys soon. Happy trading.